February 23rd, Thursday at 11:30. Today we're talking about the top 5 reasons why people would choose to refinance. Love to hear what you guys think are those top 5 reasons today. If you do want to put them in the comments below, I'll take a look at those. But one of the main reasons that people refinance, I got 5 of them today, and we'll be going through them today on Canadian Mortgage Weekly. We're streaming today live all over social media. It's streaming on Instagram, we're streaming on Facebook, YouTube, if you want to check out my YouTube channel. And if you're viewing on Facebook, that's great. Love to have you comment, share, and send this to family and friends that could benefit from this video. And why do I do these videos? I do them to help my clients and to help Canadians with their mortgage. And hopefully that these videos do help. I do get a lot of good feedback from them. So let's get right into it. 5 reasons, top reasons why people refinance their mortgage in Canada. One of the top reasons, you probably guessed it, is to lower your interest rate. It's one of the most common reasons actually people will refinance their mortgage, to take advantage of that lower interest rate. Right now, taking advantage of the lower interest rate actually is a little bit harder to do because a lot of people did take out mortgages a few years ago that were 1% and 2%. So if you're in that situation, that's really not going to benefit you. Refinancing right now will actually put you in a higher interest rate. But if you were able to take a slower interest rate, for example, you were with a B lender or a lender that's a private lender, a lot of those private lenders have extremely high interest rates that I've seen. Getting a mortgage right now could be of your benefit. Getting that lower interest rate, even though it's at 4%, could actually put you in a way better position and save you thousands throughout the rest of the term of the mortgage and perhaps even the life of your loan. So that's reason number 1, lower interest rates. What's the second top reason why people refinance? You want to give it a shot and put it in the comments below? Well, lowering monthly payments. That's reason number 2. So not necessarily a lower interest rate, but extending the term of the loan. I've had so many clients this year reach out to me and say, Joe, I cannot afford my mortgage renewal. What can I do to make my cash flow situation better? Do I need to sell and rent? Well, a lot of these people, they don't need to do that. They simply need to refinance, extend the term of the loan until rates get better, and then they can shorten it back up. For example, I'll give you a story. Had a family, they had about 20 years left on their mortgage, and they got their mortgage renewal. Their mortgage payment almost doubled overnight because of the current rates on renewal. Their original bank gave them a very low rate years ago, and then when they came up for renewal, the payments were almost double. So even though they knew that they had 20 years left on the mortgage, they could not afford these payments, and they were going to have to sell. And when they looked at options to rent, they saw that they would just be throwing their money away. And if they're going to be throwing their money away, that's actually a worse idea than extending the loan term. So what they did is they took a 40-year amortization. We looked at 30, we looked at 25. So we took a 40-year amortization. And with that, they were able to lower their monthly payments to where they were before. Took a short-term mortgage, I think it was 3 years. So in 3 years' time, they believe that rates will be back down, and that at that time, they'll be able to take that mortgage at the 37 years remaining, refinance it again, put it back to 20 years at that lower rate, and they'll be able to continue on their path and with their goal of owning their home mortgage-free in about the same amount of time as originally. So that's another reason people will refinance, is to lower their monthly mortgage payments. And if that means extending the loan term, that's what it means. What do you guys think about that? I'd love to hear your thoughts on whether or not that was a good idea for that family. But really, they could not afford it any other way. So what's another reason why people refinance? Well, that would be to actually change the terms of the loan. So what does that mean? Well, changing the terms of the loan can allow a homeowner to change from a variable rate mortgage, for example, or an adjustable rate mortgage to a fixed rate mortgage. And what does that give you? It gives you a more predictable monthly payment. And I know right now, a lot of my variable rate mortgage holders have been connecting with me to see if they can refinance into a fixed rate mortgage. So that will give you the benefit of a stable monthly payment versus a variable monthly payment. A lot of my variable rate mortgage holders have been sitting in a variable rate with their mortgage completely going up and up and up every step of 2022 and into 2023. So if rates continue to go up, that's going to put those people in a worse position every time rates go up. Whereas refinancing to a fixed rate mortgage can stop that pain, ongoing pain, and put you in a better situation going forward for the time being. A lot of my customers are taking 2 to 3 year fixed rate mortgages simply to be able to ride out the high rates and then return back to a lower rate environment in 2 or 3 years as they see fit. So that could be changing the loan terms. Also, some loans don't allow prepayments, some loans don't allow portability, and some loans don't allow blends and extends. So if you are also changing your loan terms for those reasons, you might be able to negotiate some better terms on those specific topics. Prepayment privileges being how much extra you can put down on your principal every month without penalty, how much extra you can increase your rate each payment without, not rate, increase your payment without penalty, as well as being able to have a portable mortgage term. So if you move to a new home, you won't be faced with a penalty. You can just take that mortgage with you. All right, so that was number 3. Number 4, you've probably understood this before, but accessing equity. This can be done with a cash out refinance, and then the customer can actually take that extra mortgage that they've borrowed against their equity and receive cash on closing. And that cash on closing can be used for a number of things. I've seen main reason is to pay off high interest debt. So this will be like store credit cards or consumer credit cards at 19.99, 29.99, or 21.99% interest. You're still in a much better situation paying off those credit cards with a mortgage and putting them with a rate of a 4 or 5%. Another reason would be to access equity to buy an investment or rental property. They can use that extra cash out refinance to then put down a down payment on a second property. So that's another way that people do access their equity for. And if you're this type of person, I've seen this happen before, but people want to take a vacation. So they'll refinance their home to actually take a vacation. They'll refinance, take out $10,000, and then go on a vacation to Punta Cana or whatever it is that they want to do. They haven't had a vacation in years, and it's worth it for them to have that lower stress and be able to recharge and do their life that way. Some people access their equity to buy a new car. They don't want to have a separate car loan. They want to have their home payment and car payment all in one. And a lot of car loans right now, believe it or not, are over the rate of the mortgage right now. So you're actually being able to reduce the overall interest. And a good strategy or mortgage hack about this is to be able to take that money you would have paid to your car loan company and put that money extra on your mortgage to further reduce your balance of your mortgage quickly and while taking advantage of that lower interest rate. So just some reasons why people refinance their mortgage. And the last reason is to pay off emergency debt. So emergency debt is things like Canada Revenue Agency debt. You need to pay your taxes or else you're going to be faced with a huge penalty. Or you need to pay off your HST, GST return. As a business owner, that can mean huge benefits to refinance to pay that off, because once you have that HST arrears, it's really hard to get a mortgage after that. Another reason people might refinance their mortgage is to pay off property tax arrears. If the city actually has sent you registered mail because you forgot to pay your property taxes for 2, 3, 4, 5 years in a row, you might be losing your home soon. So it's either you lose your home or you refinance your mortgage and pay off the tax arrears. All right. What is number 5? Top 5 reasons that people refinance their mortgage. Well, number 5 would be removing a co-borrower. Why would someone even put on a co-borrower onto their mortgage, you're asking? Well, a lot of reasons why people will put on a co-borrower comes down to being able to afford the home in the first place. So if you are a single person that is just starting out and you want to buy a home and you don't have anyone like a spouse or anything, but you want to buy your home, then you can actually purchase a home if you have great credit and low or no debt, but the amount that you can afford is not very much. So by adding a co-borrower, you can actually add extra funds to that mortgage so you can actually get into the market. And then after a few years, you can actually refinance your mortgage and remove that co-borrower. That co-borrower is not going to want to stay on your mortgage for very long anyway, because say if it's your father or grandfather or uncle or aunt or grandmother, it doesn't matter. If that co-borrower is on your mortgage is showing on their credit bureau, and it's limiting their borrowing power for their own mortgage or car loans or whatever they are trying to get themselves. So by refinancing, you're actually able to take a look at with the bank and broker, can I get this mortgage on my own now, remove that co-borrower, and then go on your own way. Now, the reason why you want to remove a co-borrower off your mortgage is actually to remove an ex-spouse. So if you've gone through a divorce or a separation, you want to get that ex-spouse off your mortgage because you don't want them to do anything to affect your mortgage and your stability and your credit bureau. So you're going to want to remove that ex-spouse as quickly as possible and move forward with a refinance to do so. So those are the top 5 reasons that I've seen people refinance their mortgage in Canada. So those again are: number 1, lower interest rate; number 2, lower monthly payments; number 3, changing loan terms, going from a variable to a fixed; number 4, accessing equity for whatever the reason may be; and number 5, removing a co-borrower, whether it's an ex-spouse or a family member that helped you get into the housing market. So those are reasons why you can refinance. And if you're looking to refinance, my link is in the bio. Let's take a look at some other things today on the mortgage landscape. I have some updates here for you. Get a purchase illustration for a first-time home buyer on the left here. You can see what I have. It's a example of what it looks like to buy a home as a first-time home buyer with 5% down for a starter home in today's market. Then we have the refinance illustration over here on the right, showing you someone that's established who has owned a home for quite some time, estimated value sitting at $900,000, and is looking at what the maximum cash out refinance would look like on a $720,000 mortgage with the payments at today's interest rates. You might think that's a lot of money. However, that is commonplace on what we're seeing today. All right, what's happening with the bond yield? This bond yield I follow to predict 5-year fixed rates. A few weeks ago, you might remember as you were watching my podcast that I mentioned that this was the bottom end, or could be the bottom end, of what we were seeing for the 5-year fixed rates to start the year off. And now we're up here at 3.5, just over 3.5% on the bond yield. And what has that done? That's pushed 5-year fixed rates back up, and those deals are not really available anymore. There are some lenders still offering lower rates as they were down here, but that is slowly going away as I'm seeing more lenders put out higher rates. All right, Canadian inflation. Big news today on Canadian inflation. We saw this week that the numbers came out for the CPI, and the CPI has actually gone down to 5.9%. So we're now under 6% for Canadian inflation. That is huge news, because as a Canadian, you want to have inflation as low as possible. We are targeting for a 2% inflation rate. The Bank of Canada has been targeting this aggressively by increasing interest rates all throughout 2022 and into 2023. So because of that, we've seen inflation actually drop from the total of 8.1% down to 5.9%. Do you think that the inflation rate will continue to drop? Let's keep tabs on this as we go further into the year. The next inflation update for new numbers I'll see will be mid to 3/4 into March of 2023. All right, American inflation also down to 6.4%, as you see, lowest inflation number in the last 12 months. Really good news to see. All right, the CDOR rate, we're looking at this here. We have a CDOR rate that's been staying steady at 4.99%. This steady rate has been holding steady since pretty much the beginning of January. As you can see, in January, we did see a topping off of the CDOR rate, And the CDOR rate I follow to keep an eye on if a variable rate mortgage is competitive to the fixed rate mortgage. Right now, with the variance to prime being 1.71%, we're not there yet, but it's really encouraging to see the CDOR rate staying steady, which could mean that variable rates could be more competitive in the near future. We'll have to follow this here on Canadian Mortgage Weekly, and drop me a comment if you think that you know what I'm talking about and have some opinions about this. All right. Jobs report. We did see a jobs report update in 2023. This is a new metric I'm following here on Canadian Mortgage Weekly. As you can see here, this is the beginning of COVID when jobs were down, but the Canadian job market actually added 0.8 jobs in January of 2023. That's over 140,000 jobs in January. So that is huge news. In the other direction, doesn't really help interest rates come down. Could be an anomaly. However, because rates have been going up, if jobs are going up too, it's hard to see the Bank of Canada wanting to lower rates anytime soon. So they'll probably keep an eye on this and not lower rates anytime soon. I know that the prediction right now is for rates to come down in 2023. At the end of 2023. So this is the prime rate chart here. As you see, it's been going up since February of 2022, slow and steady increases throughout the year, with our last increase bringing the prime rate up to 6.7%. Our next Bank of Canada announcement is happening on March the 8th of 2023. I'll be doing a live announcement right here on Canadian Mortgage Weekly at 10 a.m., preceded by a live pre-rate show talking about all the things I talk about here, but condensed, and on the day of the rate announcement, things like the inflation rate, the jobs report, the sentiment going on in the market. And a lot of people are actually predicting the Bank of Canada to hold rates steady or raise them 0.25%. I'm on the fence about that. I'm leaning towards the Bank of Canada holding rates steady for 2023 in March 8th because the inflation rate has been coming down, and it came down more significantly this month than last month. So we'll have to see what happens at the March 8th rate announcement. Let me know in the comments below what your thoughts are about that. Current overnight rate sits at 4.5%, and that was increased 0.25% at the last rate announcement. Okay, and now let's look at the average national house price here on episode 124. What are we seeing? That in January, the average national house price went down another 2% to $612,204. Do you think house prices will continue to go down? I know that as you see here, the orange line, they did bottom out in July of 2022, went up just a slight amount, and then back down in 2023. Could be an interesting thing that we see. But also another thing we're watching here are the transactions. As you see, the number of transactions in the beginning of the year of 2022 skyrocketed to over 60,000 transactions in 2022 in March. And in January of 22, we saw transactions hovering around 33,000 transactions that month. But this month, we are seeing close to 21,000 transactions total in Canada, which is a third of what we saw in the same time last year. And with lower transactions means that there's lower competition, which means that there's lower home prices. So not sure what will happen going forward with house prices. The spring market is just upon us. And with the spring market, as you can see in the spring of 2022, it exploded. And in the spring of 2021, it also exploded. Historically, the spring market does lead to an increase in home prices. So could this be the bottom that we saw here? Well, let's keep in touch. Watch me on Canadian Mortgage Weekly. I'll have February statistics out in the later half of March. So with that, that brings us to the end of episode 124. Top 5 reasons why people refinance their mortgage here on Canadian Mortgage Weekly. If you're looking for an Ontario mortgage broker, my link is in the bio. You can always connect with me by scheduling an appointment. I can take a look at your mortgage and give you some advice on what to do, as well as getting you a better rate compared to your bank. I work with all the lenders, have low overhead, and can work on your mortgage to get a competitive offer in front of you without fee to you. So with that, thanks for watching today. If you have any questions, drop it in the comments below. I'll see you next time. And with that, another episode of Canadian Mortgage Weekly is done. We'll see you next week on episode 125, which is in March. And in March, we're going to start National Credit Education Month. With National Credit Education Month, we'll actually start talking about credit, what helps credit, what ruins credit. I'm looking forward to seeing you then next month on Canadian Mortgage Weekly.